Hey everyone, it's been a while, but we are back for our regular monthly market updates on the real estate market. It's been a rocky past year for the real estate market, especially locally, and we've seemed to level out over the past 2 months, which is absolutely great news. We saw soaring heights over the pandemic timeframe. The market shot up, followed by steep drop in prices between 2022, midsummer of 2022, and the end of the year. But as I mentioned, over the past couple of months, we've seen the month-to-month averages actually start to trend back up. So it looks like we went up, came down, and now we've leveled out again. And you can kind of see that from the graph behind me. You can see from 2013 all the way through right around January 2021, prices started to skyrocket. That was whenever the pandemic situation hit. And then you can see that they came down once interest rates went up around mid-2022. And then now we're at that new level. So one of the things that I wanted to highlight in this video is that when you look at the past 10 years of sales data, we are actually directly in the correct trend line that we would have been had we not gone through the pandemic heights. So you take a look at the graph and see that. So you can see we had values going up roughly $30,000 to $50,000 per year from 2023 all the way through early 2021. Then when the pandemic kicked off, we saw a huge jump in prices. Prices were going up $100,000 at a time, or over the year, $100,000, $150,000. It was really quite phenomenal, but a little scary to be honest with you. Considerably more than we should have had in our healthy, growing market. That was, mostly due to the fact that we had an influx of residents coming from all around the country wanting to move to the Austin area. Lots of companies coming in, bringing their employees. And so in addition to that, we had a very low supply of homes, and that was caused by the supply chain crisis that we were experiencing during that pandemic time frame. So supply and demand just drove those prices to a new height, quite frankly. But then as you can see, once again, in mid-2022, the Fed raised the interest rates by around 2.5%, and that caused a huge chunk of the buyers to pull out of the market, and then prices started to fall. But now here's where it gets interesting. This is the trend line that I wanted to show you. Ashley, can you pull that second graph up? So take a look at that trend line. You can see that prices have actually leveled out right where they would have been had we not experienced that pandemic boom in prices. So in other words, they've hit a new mark that they would have expected to have hit right around this time frame had we not gone through the crazy highs and lows and just stayed in like a standard normal appreciation market that we were in. That plus the month-over-month statistics indicate that we're actually right back to our regular growth trends, and we've kind of balanced out from those soaring highs followed by the price reductions of the last year. So in other words, we're actually back to normal. It's a pretty fascinating graph. I mean, you can see that trend line comes right to where we should be right now had we not experienced all of the crazy price fluctuations. So yeah, we're back to normal. We're back to our month-over-month. We're appreciating. More homes are coming on the market, more sales are happening. So it looks as if, again, we're just back to the normal market that we were experiencing for the past decade, minus that little blip that you can see there during pandemic and then the interest rate increases. So pretty interesting stuff. Now, real quick, let's take a look at the rates. Ashley, if you could pull that one up for me too. As of this week, they're hovering around 6.5%. Now, they did go just below 6% in January, and we actually saw an increase in mortgage applications by 23%. So prices or interest rates came down just a tad, and basically we had a ton of people jumping back into the market once they saw that opportunity there to get cheaper money. So I think what's going on though is a lot of people are starting to realize that the new rates, or these rates that we're experiencing now, are just the new market normal for the foreseeable future. With that said, I do want to just, as a slight caveat here, let you know that we have actually been getting a lot of our clients considerably lower rates than what you're seeing above. So 6.5% is the market norm, but we've been using rate buy downs quite a bit and negotiating that with the sellers of the properties when we're representing the buyers to really get those rates down into the low fives. So I can give you a little more information on that if you want to reach out to me on how that works. It's a pretty simple process. We'll actually be doing some videos on it this month as well. So don't be too scared of the 6.5%. That rate can definitely be negotiated down in a lot of cases right now. Let's say, for example, that your mortgage broker has you qualified for a rate of 6.25%. but you pay $10,000 to the lender when you close on the home, and you can get that interest rate reduced down to 5.25%. So what we do is we go to the seller and we ask them to cover that $10,000, so it's not out of pocket, so you're having someone else buy your rate down for you. And just like that, while rates are high, if you're working with a good realtor with solid negotiation skills, you can very easily save hundreds of dollars a month by negotiating a solid rate buy down. And again, it's very common in today's market. It's not something that's out of the ordinary. A lot of sellers are willing to do that because they want to get their home sold. All that to say, rates are unpredictable, but prices have come down and they've reached a level spot and are likely going to continue to climb now at the average pace that we reviewed a minute ago. So you can potentially get a great deal in this market at a price point that's lower than it has been in about 2 or 3 years here, and you could still get a pretty good rate, low to mid fives, which is better than market and is actually on average with what we saw back in like 2020 or 2018-ish. So not high at all, especially not historically. So yeah, I don't want to keep you guys too long. My producer said that my previous market updates have been too long, so we're going to keep it a little bit short today. But we'll be releasing more content this month with some exciting updates on the local scene and pertinent information to use while you're shopping for a home or potentially selling your home in this market. As always, feel free to reach out to me with any questions that you may have, and I'll see you soon.